What's going on, guys? In this video, I want to review all the different tickers that I like to look at, in any given day or week, just to get a good understanding of how the market is doing. So I have all the different tickers on the side right over here. We're going to try to go through them pretty quickly, so the video won't be too long. But to start things off, we got the S&P 500 E-minis futures. So for this one, if I drag this out, maybe I'll show us so you can see the symbol is ES1 exclamation point. So this is the futures ETF of what's going on with the S&P 500. This will actually open up at 8 p.m. at night Eastern Standard Time. And this is when you get into futures contracts. Just kind of like to gauge how the market's going to do maybe in the next day. If some news broke during the nighttime, it may affect this either up or down. So I like to kind of keep an eye on that. And then going right down the line, we got the SPX. So this is not a tradable ticker. This is actually the index for the S&P 500. So it's not a ticker. And when they say, oh, the S&P 500 is at $4,400, as you can see right now, where are they getting that number? It's not the SPY, which is only $446. This is the actual ETF that you could buy and sell on all your brokerage accounts. So this ETF is following or mirroring the SPX, which is the actual index. So make sure you understand the difference between an index and an index fund or exchange traded fund. And then we roll right into the Qs. So again, this is an ETF. This is something you can buy. This tracks the NASDAQ, and this is how you can invest in the NASDAQ. Again, this is an ETF that follows the NASDAQ top 100 companies in that. Then we have the DIA. This is the ETF that tracks the Dow Jones Industrial Average. There's only 30 companies that make up this ETF. They're typically all blue chip companies. And if you notice down here, it pays monthly dividends. So if you're someone that likes dividends and you like these big blue chip stocks, definitely check out the Dow Jones Industrial Index. Only made up of 30 stocks, all dividend stocks, and you get that nice monthly dividend. I like to see how the DXY is doing. That is the US dollar index. That's pretty much how the dollar is doing against everything else. So yes, $1 is equal $1, but we all know that with inflation and all that good stuff, the value of our dollar is going down, or sometimes it goes up a little depending on what's going on in the market. So we could see over the past couple of years, if we really zoom out, we'll go to a monthly chart and then zoom in here. So you could see during the dot-com bubble, not the dot-com, I'm sorry, the dot-com bubble is over here. It kind of crashed, not even. So yeah, this is the dot-com bubble, little lost. So you can see the dot-com bubble kind of kept on going down. Then you had 2008, continued to go down, bottomed out around there, kind of chopped around for a little bit. It has been going back up. Let's see, right about here is COVID. It kind of crashed, and then it rode up. The reason why it rode up as much as it did is because we started increasing interest rates, as we all know. So that really affected the rest of the world and what the dollar's worth. And then it kind of came cratering down again. And then that leads into the next thing I like to look at is what the euro is doing against the dollar. So you can see right now, €1 is worth about $1.10. And you could see last year in 2021 and 2022, the euro crashed all the way down. And for a short period of time, the dollar is worth more than the euro. This worked out really nicely for me because I took a trip over to Ireland. So my money was worth more when I was over there. But then since then, the euro started to trend back up, and it's a little bit more than $1. Next, I like to see what gold is worth. It's been hovering around, say, $1,950 for the past, call it 3 years. So this is 1 ounce How much does 1 ounce of gold cost? It cost almost $2,000 for just an ounce. Go ahead and measure to see what an ounce is, see how small it is, so you can understand exactly how valuable gold is right now. And then another one to look at is silver. So how much is, so this actually isn't silver itself. This is an ETF that you could buy and hold. And then for gold, this is the actual gold index. If you want to invest in a gold ETF, it's GLD instead of GOLD. To invest in a gold ETF, GLD. I should add that onto this, but whatever. Of course, one of my personal favorites, Bitcoin. So I'm looking at it in US dollars. So we got BTC USD. This is how we could track what Bitcoin is worth. We could see right now, the entire year of 2023, it's been slowly trending up. We started the year at around $1,700, and now we are at around 17,000. And right now we're around $30,000. That's where it's been hovering for the past, maybe call it 3 months or so. And even though I don't own any, I do like to keep my eyes on Ethereum. I'd like to see Ethereum actually crash and hit new lows, and then maybe I'll pick up some for a short-term bet. But this video isn't about what I'm going to be trading in. It's just what I like to look at. But currently, disclosure, I don't have any Ethereum. When it comes to crypto, I am only in Bitcoin. And then let's jump over to the VTI. So this is every single US stock. It's made up of a little over 4,000 stocks. It's all the US holdings. And I do have a decent amount of money in this in my brokerage account and some of my retirement accounts. So naturally, I like to see how it's doing. And it kind of mirrors the S&P 500 with a little bit of variance, but nothing crazy. Then that leads into the VXUS. So this is the international ETF. This is every single stock in the world minus the US stocks. So you got stuff like Nestle, Samsung, Toyota, all those big international companies. I think it's made up of like 7,000 different holdings. So if you want some international exposure and you're in the States, this might be a good choice. Go ahead and look into it to see if it makes sense for you. And it does pay dividends. It is a quarterly dividend. The dividends, I think, are a little high, which is kind of nice. Let's just take a look really quick. Yeah, almost 3%, so that's not that bad. And then speaking of dividends, I do hold some Schwab dividend ETF, which is the SCHD. So I like to track this to see how it's doing. This also has a decent dividend. I know it's in the 3.5%, so that's even better than the international. This one really doesn't have that many stocks. I think it's only like 100 and something, maybe 105, 106 different stocks. So it's not a whole lot, but it's a bunch of blue chip dividend stocks. So that's why I like to hold on to it more for my retirement accounts, mainly because I do not want to pay any taxes on these dividends that I'm getting quarterly. So I park that in a retirement account, especially a Roth IRA, all tax-free. And then that leads into, this is a REIT. This pays, as you can see below, monthly dividends. And it has been real beaten up, really since, I think before COVID. Yeah, you can see it has not recovered since COVID. But if we do adjust it for dividends, see, it's almost recovered. But because it's really beaten up and the dividend is high, I do hold on. It's over 5%, 5.18%. This has been around forever. I think back in 1995 or 1994. And it's made some incredible gains over the past 20, almost 30 years. So I do hold some. I think it may dip a little bit lower. Maybe we'll hit lows, what we saw back in October. And then right around that like $56 or $55 price, you're picking up for a real nice price. Not financial advice. That's just my opinion. But I do own some O. And again, I only have this in my Roth IRA because I do not want to pay taxes. Fun fact, a REIT you're not getting taxed at capital gains tax, which is either 0, 15, or 20%. For REITs, you are getting taxed at your income level. So if you make a lot of money and you're being taxed at 40%, you'd be taxed at 40% for this REIT as well for all of the dividends you make. So keep that in mind, especially if you put a lot of money in it. Let's say you put $100,000 in it, you're making $5,000 on dividends each year. That $5,000 is being taxed at 40%. So park that into a Roth IRA or some other retirement account, a 401k, so then you could avoid those taxes. And then we have the VIX. So this is the volatility index. And when the market goes down and becomes very volatile, this will spike. We have been running up in what people are calling a bull market. I think it's a bear market rally, but we'll have to wait and see. It has been crashing down to a real low level of around 14. But you could see here was COVID. It spiked like crazy because we dropped 30% in a couple of days. And then you can see it's just been kind of a wild ride over the past couple of years. But the volatility is really low. So it is kind of nice to see this. Maybe we're going to be expecting another spike soon if we end up crashing, or maybe not. But it's fun to look at. Now we get into some of the weirder ones. I guess the VIX is the first weird one that you may not realize you could track. This is your Fed balance sheet. This is what the Feds have on their balance sheet. A lot of people on Twitter will talk about it. You could see during the stimulus period in COVID, it shot up like crazy. And this is when they were printing money and they were adding assets. And then finally they said, we need to decrease the balance sheet. And they've been slowly decreasing it. Let's look over the past year. So back in April or May of 2022, they've been decreasing it. What happened right here? This is why I like to look at this stuff. Silicon Valley Bank failed, and then they had to inject $300 billion to help save that, and so they didn't cause a whole bank run on the entire industry, which would have destroyed everything essentially. And now they've been slowly cutting away at that again, and we're back into a pretty aggressive tightening cycle. So it is really interesting to see where the market is over the past year. We had this huge liquidity injected into the market once Silicon Valley Bank failed, but they went right back to tightening. So let's see how much longer they could possibly tighten before we enter quantitative easing again. This is your QT or QE. So right now we're in quantitative tightening. This was a bunch of QE. You could see back in 2018, they started quantitative tightening and the market did not like that. And then if we keep going back, you could see there really wasn't a lot of money printing until the housing market crashed. And then that's when the money printer just went crazy. Definitely not a sustainable thing, but it is interesting to watch. You'll see it's only on a weekly basis, and usually it's Wednesday or Thursday is when they will post where the balance sheet is at. So it's fun to watch that. Then we lead into U.S. government bonds. So this is the 10-year. You can see the 10-year right now is at 4%. Then we have the 1-year, which is at 5%. If a shorter term, if a 1-year is higher than a 10-year, that means that we are currently inverted, which is one of the best predictors of recessions. So I also look at, this is your 10-year to 3-month inversion. You can see right now the yield curve is inverted. When it dips below 0, we are inverted. We are pretty extremely inverted. This only goes back to 1990, but you can look up at this chart and go back even further. You can see here was the dot-com bubble. It was inverted. Here's 2008. Well, actually in 2007 it inverted, and then shortly after we had a recession. And then right here you had COVID-19. So right before, maybe a couple of months before the COVID crash, it was inverted. So look how extremely inverted we are now. The last time we were this inverted was actually back in the Great Depression. So again, super interesting chart to look at. It's not like as soon as it inverts, we hit a recession. Sometimes it takes a couple years to play out, but it's definitely something I like to keep my eyes at. If you are looking for a house, you could actually check out what the current mortgage rate is. I think this goes, yeah, week by week. You can see what the current mortgage rate is in the US, and that ticker, it's a little cut off. So you got right there, mortgage 30 US. So pretty simple. You can see right now we're around 6.9. I think it's actually a little bit higher now, but this updates every week. I think maybe every Sunday or something like that. So it's fun to be able to track that right on TradingView. And then the very last one is, this is the Case-Shiller Index. So this is what your average home is worth. I think it goes by monthly. So you can see this was your 2006 bubble, and then 2008 happened, and then we've been cranking up higher ever since. This definitely looks like bubble territory. A lot of people think because we are at an inventory shortage, we'll keep going higher, but also a lot of people say that this is unsustainable and we should see some meaningful pullback. So if you want to be able to track it right on TradingView, here it is. It's USCSHPI, and then that's how you can check that out. But those are all the tickers that I like to look at. Hopefully you guys found this video helpful. If so, to make sure to smash that like button. And guys, as always, I will see you in the next one.